Hello everyone, welcome back. Looking like a lobster on here. I think it's because I think my team told me the green shirt makes my face look red. It's all right. Make sure we got audio check. Make sure screen share is going good. 1 second, let me get logged on to YouTube here and we'll get right into it. Alrighty guys, should be good to go here and myself. Hope you guys are doing fantastic. And let's get right into it. Money Glitch, hello sir. Alrighty guys, so it is Sunday, second week of August, ready to get back to business here this week. So going forward, the next 2 weeks, this will be the last live stream of this particular month. I will be taking 2 days of holiday, going back to the US, taking it easy, closing out the last couple months of September. Not that it's impossible to trade, just want to take some time away from the charts. Been going at it hard all year. So it's good to take a step back, take it easy off the charts, and then September is going to bring plenty of beautiful opportunity. Now, not that August hasn't. I see a lot of people complaining about August price action, but I think it's just a skill issue. So let's go and get into it, guys. As always, I will break down what I'm looking at here for today, get into my targets, get into what we're looking at going into the coming week, what opportunities I'm going to be looking to capitalize on and where. And then, as always, I'll take a few minutes for Q&A here at the end of the session. So appreciate you guys joining us here today. Let's go and get right down to it. So picking up from the US dollar here. should be all good. Yeah. Seeing the connection thing here on OBS was yellow, making me a little nervous. All right. So looking at the monthly chart here for US dollar. All right. So last week we were watching this down close, see if it wanted to act as a bullish order block. It did not. So I'm going to remove that here. What I was watching was this monthly inversion fair value gap. Right now, we're respecting the lower half. That's signaling bearishness to me. So we still remain heavy on the dollar on the monthly, weekly, and daily, and I'll get into those details here in a second. Other component I'm looking at here is this wick. So very similar to how I use this inversion fair value gap to read order flow, telling me it's bearish because it's staying in the lower half. Very similarly, using a wick in the same way, because wicks are also inefficiency. So you see the market trades up, hits the lower quadrant. That's bearish because if the market can't trade above the midpoint, then it's telling you it's decisively weak. The other thing I want to touch on, if we were going to remain bullish, we would want to see these premium arrays traded to and through and closed above. So we just want to see the market smashing through that. So if we were going to remain bullish here and this actually be an order block and the market start to trade higher, I would need to see to confirm that the market smash through the wick midpoint, this inversion fair value gap, and just run through it as if it's not even there. The fact that it wasn't able to do that is a clue. It's an indication that the market is heavy. All right, working down into the weekly chart here, refining this further. So we see that monthly gap, traded up into it, rejected it. Wanted to see this week if we could run through this weekly wick that we created, but in fact, we saw the opposite. Again, as I just covered how we use wicks. Market opened this week, traded higher, hit the lower quadrant, signaling bearishness, signaling weakness. So because that lower quadrant respected there, market selling off, indicating the market is heavy. And then you can also see the effect that that monthly gap has on price where we traded up into it, market sold off. And now we're seeing weakness from here. So my draw on the weekly chart, if you're doing like one shot, one kill type of business, looking for the rejection block here on the weekly. And then below that, we'll have the sell side here. There's a level in between that you could use as a target if you'd like to, and that would be the midpoint of that wick here. That would be another target you could use on the weekly chart. So looking for heaviness on the weekly chart, as long as we remain below the midpoint of the wick on a closing basis. So as long as we remain below midpoint of this wick here on a closing basis, I'm still looking for lower prices on US dollar. All right, further refining down to the daily chart here. So two things we were watching last week. This up close candle here, wanting to see if it could act as a bullish breaker and send the market higher. It did not, right? And that gives us insight. The other thing we saw on Monday was a very small range, which created a fair value gap here. On Tuesday, we traded up into it, made the high of the week, and this is a balanced price range because it's where the two fair value gaps overlap. That's where you're going to get your partial entry into a fair value gap or your institutional order flow entry drill when two fair value gaps overlap like that. And for those of you guys that work with me, you guys see me trade that all the time, and then you put the stop right above the midpoint because it shouldn't get to that level. It should be institutional order flow entry drill. From here, the market trades higher, nosedives into this gap here. And now we have up close candle bearish order block. So what I'm watching here going into the new week is we have this down close, which is a bullish order block. And then we have the sell side down here. This is my draw. I'm expecting the market to trade lower into these levels this week, as long as we remain below this bearish order block here, this up close candle. So as long as we remain below that, I'm looking for lower prices into the order block as a first target. And then if we flush through that, then I will look for the sell side here going forward. And then that breaker, if you extend that through, that should act as an inversion, meaning we traded through it. Now it should respect it and be basically like a reclaimed bearish order block. All right, working down into the 4-hour chart, what I would like to see here. So we had that institutional influential drill here. This price is in a key high. I don't want to see this high taken out. It's reasonable for the market to trade higher. I'd want to see this high here be a turtle soup. So turtle soup to high, break down, and run into the targets that I'm looking for. Again, what invalidates that would be the market trading above this high here. So if we get through this key intermediate term high and we violate that, then that would make me neutral to bullish. So that's what I'm weighing out going into the new week. So again, turtle soup here, drop into sell side is what I'll be looking for going into this week here. Alrighty, moving right along here into bonds. Nothing I'm liking in bonds. Going all the way up to the monthly chart. We're still inside this nasty consolidation. And again, if I call markets in that, if it's even amateur hour, even with what you guys see, I'm able to do. So markets remain in the consolidation on the bond market. Other than surgical strikes, nothing. I'm interested in this market, and it's not giving me a whole bunch of help in terms of directional bias for the underlying currency, which is the US dollar. So nothing on bonds yet. Oh, and let me tell you guys the date I'll be back. I want to let you guys know. All right, so August 18th, I'm heading out. Yeah, so so Sunday, August 7th, we'll be back. So August, getting it mixed up here. See in August, but I'm thinking of September. All right, so September 7th is the Sunday we'll be back. So taking a couple weeks off, and then we'll be back to business here after that. So yeah, like I said, nothing on bonds that I'm interested in here. So let's go into the let me see here. All right, so let's take that off here. And we'll just keep this one on here. Perfect. All right, so let's drop down to the monthly chart here. All right, so monthly charts, we made the low of the month already inside this this monthly fair value gap. I don't want to share that here with you guys in terms of the analysis because initially last week, I want to go back to that. You saw I was initially looking for a drop into this weekly gap here because I wanted to see the market drop into that, create a low, and then expand higher off that into the targets that we'd be looking for. However, we ended up seeing that the market did not want that, and I was able to give that update real time here in the middle of the week saying, low of the month has been priced in. We're looking for a continuation, sticking with all-time high protocols. So premium levels remain the target. And then what are those premium levels? Obviously, from the bullish order block, we're looking for the market to trade from a discount to a premium. That's all these interbank algorithms are doing. Discount to premium array or premium array to discount array. It's very simple once you know how to read the price action. So from here, bullish order block, looking for the market to trade higher into the rejection block here. And that would have been good information for you guys to know. I'm sure it would help you stay on the right side of the market, right? So looking at the weekly chart here, I wanted to see the market initially drop into that weekly gap to see if we could, but it didn't, right? It showed no willingness to want to do that. So what that then allowed me to pivot and see was, okay, they have this monthly fair value gap here. They dropped it down into it, and that's all they needed to do. It didn't need to drop any more than that. So once I saw that, okay, they weren't going to drop it anymore, that's fine. Get in sync with what the market showed me, which was higher prices, and of course, keeping those that are with me on the right side of the market. So looking at the monthly candle here, still looking for continued bullishness. I'm seeing the open lows been priced in. Now we're looking for the distribution phase of the monthly candle of August. All right, looking at the weekly chart here. So again, this weekly fair value gap not filling is even stronger for bullishness. So the fact that it couldn't fill in is even better because it's signaling that it's going to leave this range open, which is exceedingly bullish for the market that you're looking at. So what I'm watching here is this down close candle here. I want to see that act as a bullish order block going forward. My targets on the upside are 24,380, 24,900, and then 25,450 as long as you remain bullish through that. But we should not take out this down close candle on the weekly chart. That should remain support. New buying opportunities for institutionally minded traders for new higher highs. All right, working down. Let me show you guys something here on the 12-day chart here. I was just going to share this tomorrow in live trading, but I figured I'll share here with you guys. All right, so we have two fair value gaps here inside this range. So we dropped down, filled this one, left this one open. So that's exceedingly strong. So those are other factors supporting why I'm very bullish in my outlook on the equities. All right, so looking at the daily chart here now, refining what we're seeing on the monthly, weekly. So again, it's very important when we drop into these lower time frames, and not that the day's lower time frame, but relative to the monthly, weekly, it is. When we drop into these and start lower time frames and start zooming into the market, it's very important to keep in mind that higher time frame perspective, because a lot of people are trying to sell short, sell short, sell short, sell short, and getting absolutely fucking smoked because they don't know what they're looking at on the higher time frame. So it's very important to understand your top-down order flow, because again, the monthly is going to be more important than the weekly. The weekly is going to be more influential than the daily, and of course, the daily is going to be more influential than all the lower time frames. So again, keep in mind your higher time frames. You don't want to be the person going getting smoked, trying to go short all-time highs. So every trade that I took this week with my mentorship group and my own trading was all focused on longs, because again, if the weekly candlestick is expanding higher, I want to focus in line with higher time frame institutional order flow, and I want to trade in line with those cleanest, most explosive price runs. Not that I can't buy and sell in the same day, and you absolutely can. However, for the cleanest, easiest price runs to get paid, stick with the higher time frame order flow, trust buy models, and that's what works very well for me. And you can see that when the weekly candle expands bullish, the highest probability opportunities are going to be on the long side of the market. Not that you can't go short, not that no one can make money doing it. It's just that I want the easy trades. I want to get in, get paid in under an hour, and then enjoy the rest of my life. And that's the life you can create for yourself if you learn how to do this the right way. So looking for higher prices and kind of sharing. Now, how does the weekly outlook meet the analysis of my actual trading, right? Because it's one thing to talk about these candlesticks on Sunday, but the whole reason we're here is to make some fucking money, right? So how do you make money? That's what I'm sharing here. So what this helps me do is filter shorts. I don't want to really worry about being short. Can I take a short scalp? Sure. But I'm trying to focus on the price runs that are going to give me the biggest, most explosive runs. And that's going to be in line with higher time frame institutional order flow. All right, so dropping down into our daily chart now. So this is a bullish order block here. We're watching that. Let me show you that here. And let's get the midline on there. All right. So bullish order block, I'm not going to label it, just to know it's this down close candle here that traded in the sell side. So we dropped down, bullish order block. We respected the upper half. That's bullish. So very similar to these inefficiencies. We want to see all PD arrays respected in their upper half. So the fact that the body stayed in the upper half, that told me we're bullish. Because this is an order block, that makes this a propulsion block. So we traded into that on Thursday. Really nice longs. And then Friday open, expanding higher into the target I had, which was the rejection block here, which is just the highest close. And then above that, the next logical level would be the 50% of the wick here. And then through that, we have the all-time highs here. Above all-time highs, I'm looking for these price levels here. And then the reason I particularly like the 900 level is the convergence we have there. So like the 24,900, and then if we remain bullish through that, I'm looking for 26,000. So let me put that on here as well. So 26K would be reasonable on the indices. Let me. Perfect. So upside targets are all here as long as we're remaining bullish going forward. So what I mean by remaining bullish, I want to see this weekly candle support price. Again, nothing should violate this weekly down close candle. Further refining that to the daily chart, if that's a bullish order block on the weekly, it's going to be a bullish breaker on the daily chart. So we have a low here with the lower low. So the highest up close here inside that range, extend that through. That's going to be your bullish breaker. So we also have a bullish breaker here and would want to see that expand higher as well. One of the two things I'm using for fib projections is the retracement leg here, and then as well as the breaker. So those are two critical swing points that I use for fib projections, and then I look for the convergences. In and of themselves, like individually, they're helpful, but if you have a convergence, then it's just even stronger for that to be a draw liquidity going forward. So looking at the daily chart here, we had a sell-side liquidity run here below these lows, expansion higher, looking for the market to take out this high, and then we want to see it do so with speed. We want to see it really run higher if we're going to get up into these limit orders, or sorry, into these used to trading and sharing live. Want to see us expand higher into these targets where we could have potential limit orders for profit taking. All right, so from here, we will drop down into the 4-hour chart. It's better this daily gap is left open. So just showing my cards through here, I don't want to see this daily gap filled in. That should be left open. And the reason being is because this is a bullish breaker here. So now looking at the 4-hour chart, you can see it's a little more clearly. These consecutive up close candles extend that through. That's a bullish breaker. So we should remain bullish to that, run for the high. They probably will do that on Monday. So they'll probably run that liquidity out on Monday. And then from there, we have all those upside targets that I'm looking for. So if we look at what's happened on the indices, right, this huge drop down here was just to clear out the sell side, right? So retail-minded traders are going to have a lot of sell stops here going long. So the way you protect a long position is with the sell stop. So there's sellers down here to low price. Smart money wants to buy it, right? So they're going to drop it down into those sellers. Smart money's going to buy. And then from sell side to buy side, same shit, different week. Any questions from me, guys, before we get going here? Now you just take a look at the usual suspects here. Hey, Samad, happy Sunday to you, sir. Let me look at the... Yeah, take a look at gold here. Especially if we see continued weakness on dollar, and that's going to allow gold to really start to rally. All right, so looking at the... We'll take it from the monthly chart here with gold. All right, so gold, we've been talking about all-time high protocol, meaning trusting higher prices. So I'm still looking for higher prices on gold. Again, I don't trade gold. I think gold is an amazing investment long-term, like physical gold, not the paper ETFs, like actually owning it. And that's one other conversation as to why I think that. But I do think gold is going much higher on the back of a dollar that's just absolutely cratering. And not cratering because the dollar measures the relative strength. The absolute strength of the dollar is going lower, as well as the relative strength. So the DXY measures the relative strength relative to other currencies. But the absolute strength of the dollar is cratering. Just look at the grocery store, look at the price of real estate, land, everything's going up because the dollar is going down. So with that in mind, gold's also going to go higher on the back of that. So we're going to see much higher gold, higher metals, and anything that's real, that's tangible, is probably going to go up in value significantly. Just like your food has, gold, silver, cars, real estate, all the above is going much higher because the dollar is worth so much less. So we're going to continue trusting buy models on gold here. Looking at the weekly chart now. So we just took out the all-time high here. We'd want to see some strength above that if we're going to keep ripping here. Yeah, not a really big fan of this intraday market structure. So just going to stick with my long-term outlook, which is bullish here for gold. And then what do we got here with... So silver, or not silver, crude oil remaining heavy here. Yeah. Alistair, great stuff as usual. Thank you, sir. Much appreciated. Glad to have you. Yeah, just not really like it. Crude oil, not a clear read for me. As of right now, it's bearish, but we're already at such a discount. It doesn't really give me clean levels to justify lower prices on. Do have sell side here if we keep accelerating, but nothing too interesting there. I'm sure everyone's interested in cryptocurrency. Let's see. Yeah, so off that bullish breaker we're looking at back here, it's absolutely ripping. Another drop down to discount, range low here, or sorry, range high, range low, equilibrium, discount higher. And then Ethereum, absolutely mooning. Clearing out buy side here, and then got buy side at the 4,800. Wow. So cryptocurrencies absolutely ripping. Haven't been touching cryptocurrencies much on my end. Just been mainly focusing on index futures, just because with the equities market, it's all you need. You just need one market to do really well. In terms of investments, though, and other opportunities, tons of opportunities in these markets all around, right? Long stock, long gold, long cryptocurrency, a lot of opportunities to capitalize on these higher time frame swings outside of intraday trading. That's the cool thing about the skill set as well, is it's not just limited to intraday trading, scalping, taking down the AM session range or the daily range. You can even use these insights to take advantage of these higher time frames. So very interesting, cool stuff there that we're able to do with that. So don't see any more questions here on my end, guys. So with that being said, I will see you guys on the other side of September. Have a phenomenal rest of your August. Stay safe, take it easy, don't push too hard. Make sure you're managing your risk, taking it light, and that will probably serve you very well in this price action, which again is still not difficult to navigate if you know what you're doing. But if you don't know what you're doing, it's very easy to get yourself into some trouble, especially in these months here. So with that in mind, guys, stay safe, take care, and we will be back to business in September, October, November. Going to be beautiful months, and looking forward to absolutely crushing it with you guys. So with that being said, I will see you in the Discord. I will be sending updates and analysis throughout the week as I usually do. So be sure that you guys are in there so that you guys are up to date with what I'm looking at, and you guys can have the opportunities understood before they happen instead of after the fact like most traders do. So with that being said, guys, take care, stay safe, and I will see you guys on the other side of August. Bye, everyone.